If you want to know what the 1920s were like for average investors, look at the crypto market today. That's what it was like. Firms failing left and right, wiping out your assets when they did fail, no truth in disclosure, no common terms, no standardization of requirements, no rules, no regulations. They had nowhere to turn if you get ripped off. Hi, I'm Diana B. Henriques, and I'm the author of Taming the Street, The Old Guard, the New Deal, and FDR's Fight to Regulate American Capitalism. I think this topic is incredibly relevant to where we are today in the American economy and to some degree in the world economy. FDR came to power in 1932, elected in 32, sworn in 33, on the back of the worst economic crisis the country had ever faced. And part of the input to that crisis was trade policy, high and kind of eccentric tariffs that were slapped on under the Hoover administration, with Wall Street in opposition, by the way. And those tariffs contributed to a slowdown in international trade that just compounded the domestic factors that were building to the Great Depression. So as I'm looking at the election results here in the U.S., I'm very mindful of that, of the T word, the tariff word, and the likelihood that it's going to have an impact on our economy right now. Already we're seeing companies advance buying, stuffing their warehouses to avoid the tariffs that will go into place next year. And that's going to have distortion effects that are going to be felt all the way down the supply chain, from shipping lines to warehouse jobs. So I think there's going to be a pretty fast cold wake up, a pretty fast realization that this is going to do a lot of damage. So it's historic parallels are interesting to me.
Diana, you're the author of the book, The Wizard of Lies, about Bernie Madoff and his Ponzi scheme. And you just released a new book, I believe it was last year in 2023, called Taming the Street, The Old Guard, the New Deal, and FDR's Fight to Regulate American Capitalism. And for me personally, I think the 1920s, I mean, I know FDR was elected president in the 1933, but the 1920s was one of the more fascinating time periods in American history. Yet I think this time period is vastly distorted. People think of like these fancy cars and the flappers, and of course we had Prohibition, so we think of speakeasies. Also, like when it comes to Prohibition, most people don't realize, but Prohibition lasted 14 years. Was it like 1919 to 1933? I mean, most people think Prohibition was like a couple years. It wasn't. It was
more than a dozen. It went into effect in 1920, and it was it had to be removed from the Constitution. Roosevelt was able to achieve a mini repeal by illegalizing low alcohol beer very early in his administration. That was one of the first early things that he did. But yeah, it took a long time. And I think you're absolutely right, Jesse, that the 20s has the greatest press agent of all time. I mean, people think of the 20s as, raccoon coats and flappers and their cool modern dresses and the gorgeous cars, the Stutz Bearcat and the beautiful roadsters, bathtub gin and the Great Gatsby, and one long party of prosperity. And as I point out in Taming the Street, that's just not true. I mean, just absolutely not true. I should say it was true for a tiny sector at the very top of the U.S. economy. The one percenters of that era. Yeah, they were living large and living long and loving every minute of it because they never missed their liquor. I mean, everybody had a private bootlegger who broke the law on your behalf and got you the cocktails you were used to having. It was the little people who got crushed by the prohibition enforcement effort. So there's one 1920s that was experienced by a tiny slice of the economy, and then there's another more complicated 1920s that was experienced by ordinary Americans. And that was far less attractive. Lots of new consumer goods coming online, no doubt about that. The first electric vacuum cleaner, electric irons, household appliances that made women's lives easier. But many of those to be purchased were purchased with debt, with consumer debt, which compounded the economic hardships in the Great Depression. Income inequality rapidly expanded in the 1920s. The rich got very, very, very much richer, and the poor either stayed the same or fell behind. What's largely forgotten about the 20s is that for big sectors of the U.S. economy, they were already in a depression. The farmers of America, which at that time were a much bigger sector of the economy, much bigger percentage of the economy than they are today. The farmers of America never recovered from the recession of 1920-21. They had expanded capacity during World War I to feed a Europe that was at war and to take markets away from other countries that they used to serve. So farmers had gone into debt, bought new equipment, rented or leased or bought new land and expanded their crops. And during the war, were incredibly prosperous. But when the war ended and Europe began to restore itself and to re-enter the agricultural markets, agricultural prices in America plummeted. It just fell off a cliff. And farmers never really recovered from that 1920-21 decline. So they were in hardships all the way through the 1920s, which meant that the banks that served farmers were fragile and shaky and failing with great regularity. That there were farmers who could not possibly buy the consumer goods and products that were coming out. And remember, there were a lot more farmers then as a percentage of the population. So the very early slices in consumer demand began at the beginning of this great, supposedly prosperous decade. If I could contribute anything to people's understandings of the 1920s, it would be, figure out where you would have sat in that decade and you'll know what it felt like. If you're at the upper tier of, Wall Street affluence or you own a steel company, you had a pretty good 1920s. If you didn't, it was a pretty rocky time.
One of the more interesting things from your book, Taming the Street, you talked about Joseph P. Kennedy, who, of course, would be JFK's father. And everyone kind of hears these stories that JFK's dad, Joseph Kennedy, was a bootlegger and that he worked on Wall Street and, manipulated Wall Street. But to think that the first commissioner of the SEC, the Securities and Exchange Commission, which is really what your book is about, it's about, prior to FDR, there was no SEC. The Wall Street it wasn't just that there was few regulations, there was zero regulations. The only regulations that they had were from the stock exchange itself, which could be manipulated if you were friends with the president of the exchange, as you talk about. But as you mentioned, they essentially had the fox guarding the hen house, right?
And that appointment was just incredibly controversial and outrageous to Roosevelt's followers. His New Deal followers couldn't believe it at first. Someone heard a rumor that Joe Kennedy was going to be put in charge of this new Wall Street regulatory agency, first ever in the history of the country, and they thought it was a joke. I mean, that's ridiculous. There's actually no proof that Kennedy was ever a bootlegger. I mean, any more than everybody who bought illegal liquor in the 1920s could be called a bootlegger. He, of course, like any good Harvard man, bought liquor for the reunions through his personal bootlegger, but there's no evidence at all that he was actively violating prohibition on any industrial scale. I think the roots of that rumor is that right after prohibition was lifted, he was ready to step into the liquor import business and started importing quality liquors from England, Scotch and gin from England, and made a fortune out of that company, Somerset Importers, which is sort of like the piggy bank for the Kennedy trust funds for a long time. But he certainly was a Wall Street buccaneer. That part of the legend is absolutely true. he routinely did things that the SEC made illegal. Now, they weren't illegal when he did them. Everybody was doing them, and they were not illegal. Were they unethical? I thought so. Were they immoral? Some people would argue that. But he was not breaking any laws that existed at the time. But the advantage that gave him, and I think Roosevelt was very prescient to see this, is that nobody on Wall Street, of course, everybody on Wall Street was resisting this regulatory push, but nobody on Wall Street could say that Joe Kennedy did not know their business, that he didn't know what he was doing, that he was a naive, do-gooder, academic pointy head and didn't know Wall Street. He knew it down to the ground, and they knew it. Wall Street knew that he had that expertise. So that defanged the criticism, or at least softened the initial opposition to the agency itself. Now, other members of the original commission were more hostile towards Wall Street. Ferdinand Pecora, who had led the legendary investigations of Wall Street for the Senate Banking Committee in 1933 and 34, was appointed to the commission. No, his nickname, in fact, in the name of a very fine biography of him, is the Hellhound of Wall Street. I mean, that's what Wall Street thought of him. And then there were several senior Federal Trade Commission people, Jim Landis and Robert Healy and George Matthews, who were strong regulatory advocates. So Kennedy was the one voice on the new commission that Wall Street could not object to. And he was very effective in that role. But what he spoke for, what he championed, was the idea that honest people on Wall Street had nothing to fear from the SEC. They were there to protect investors. The SEC was there to protect investors, and so long as you weren't ripping off investors, you had nothing to fear from the SEC. And I think he was very persuasive in making that case. The truth that the New Deal showed us, and I try to capture this in Taming the Street, is that unregulated markets only work for the rich and powerful. Unregulated markets do not work for ordinary investors. And I don't care whether the unregulated market is for stocks and bonds or whether it's for crypto and stable coins. Unregulated markets are not healthy for ordinary investors. And making sure that the markets did work for ordinary investors was it's part of the heart and soul of the New Deal. It was one of Roosevelt's driving ambitions. And I think the fact that he achieved as much as he did in the face of unrelenting Wall Street opposition, in fact, conservative right-wing opposition that continues to this day, we are going to see enormous fights in the year ahead over how or whether to regulate American business. And our Supreme Court at this point has leaned heavily in the direction of restricting government's ability to regulate business. The appointments that President-elect Trump makes will be critically important to how that unfolds. And, to all the people who think, oh, goodness, this is going to be wonderful, they're not going to regulate crypto, be careful what you pray for. Because if you look back at the 20s, unregulated markets were the playground for the rich and manipulative, and did no favors whatsoever for little people. So if you're a $1 billion crypto investor, if you're Elon Musk, you're going to be happy with no regulation. If you're you and me, you're not going to be happy with no regulation because you don't have a chance of detecting a manipulated price, of detecting a deceptive prospectus, of detecting lies and misrepresentations that are being made in the crypto space. And hey, we know all of that has happened because it's been exposed. I mean, it's not like, oh my gosh, who would ever think of fraud in the crypto market? And we've had it. So clearly it's not a market populated by angels. And to leave it unregulated is to my mind, put any ordinary investor at risk in it. So if I were a fan of crypto, if I wanted to promote cryptocurrencies as a reliable, meaningful, addition to our financial system, I'd be arguing for regulation. I'd be begging Washington, please regulate me so that ordinary investors will trust me, will trust this market and will come in. Otherwise, we're just going to be a bunch of big guys throwing money at each other. That would be my recommendation anyway.
If you read any book about Warren Buffett, the greatest investor of all time, or if you see any documentary, basically he's like, all I do is I sit in a room and I read 10K forms. And these 10K forms I've read numerous 10K forms as an investor myself, and most of them are well over 100 pages, but they pretty much tell you whatever you need to know. I've literally read 10K. I've had people contact me and I've like, hey, what do you think about this company? Pulled the 10K form, and in the 10K form on like page 30, I'll be like, well, we lost 95 million last year and we're going to lose 100 million in the next 5 years. Like, okay, I wouldn't invest in that company.
Right. And our auditors are a little uncertain about our going forward. And three of our board members declared bankruptcy. And
right.
All of that is
it's all, again, it's not in like the P&L or the balance sheet, but in the 10K form, and you can see the CEO compensation, right? You can see all this stuff,
all the conflicts of interest, the related parties,
right? It's all listed right there. Yeah. Anyone can access this information. You can go right to the SEC website. You don't even have to have the ticker tape, right? You can just like half spell it, right? But like, where does the 10K form come from?
It comes from FDR. I mean, this is what's so amazing. It's so hard for modern investors to conceive of a time when, number one, the price of a security that you own could not be relied upon. Now, we're used to looking up, let's see, my husband worked for Johnson & Johnson for many, many years, so we've got Johnson. I could look up J&J stock on my phone, and it would tell me what the price was right then and there. Now, obviously, I know it's going to shift. If I can't sell right that minute, it might not be exactly that price, but I know that is the price at which J&J shares are changing hands. That was not true in the 1920s. In the 1920s, even the New York Stock Exchange, which was so far head and shoulders above every other of the 120-some stock exchanges in the country at the time, even the New York Stock Exchange had prices manipulated by whales, we would call them today, big investors who would buy up a few, get options and buy them up, and then hire someone on the floor of the New York Stock Exchange to create phony trades, to create the image of a boom in that stock and artificially drive the price up. And as soon as the public was pulled in, ready to to sell at that price, the price would collapse. So the idea that you can trust the price, the value of your securities is a gift from FDR, from Roosevelt. And second, as you have pointed out, disclosure did not exist before FDR. Companies were not required to produce audited financial statements to their investors. Some did, but most didn't. Very few produced audited financial statements. Some produced financial statements that weren't audited for what that was worth. But the kind of information you get in a prospectus, as opposed to, in addition to the 10K, in executive compensation, conflict of interest transactions, the background of the board of directors, not available to anybody except insiders back before FDR. So this concept that FDR's New Dealers had of full disclosure, let sunshine do the policing for you. So long as you tell investors everything they need to know, like we're going to lose $95 billion this year, as long as you tell investors that up front, then it's their decision whether to invest. Regulators are not going to say, no, your stock can't trade, or your company's too dicey, we're not going to let you trade, as long as you're honest with investors. And that full disclosure regime, as they call it in the law schools, was a brilliant adaptation that it democratized our markets, made them safer for average investors. If you could read, you could understand what was going on in your companies. So, and they had to be provided, and they had to be updated, and most importantly, they had to be honest. It was a violation of the law to lie in a 10K or to leave out material information that should have been in there. So there was a stick in addition to a carrot. You could trade your stocks, but if you lie to investors to trade those stocks, we're going to catch you. And the SEC did. So, for those who think, oh, well, I don't need regulation, I can look out for myself because I can read all these documents. Without the regulations that FDR put in place, you wouldn't have those documents. Or if you did have them, you wouldn't be able to rely on them as honest and complete. So that was one of the biggest changes that Roosevelt brought into American finance, the idea that ordinary investors deserve to have the information that insiders and big guys used to get.
You mentioned crypto before. I think at this point, Bitcoin is kind of like a separate category just because it's been so institutionalized, especially with the ETFs, and you have like these institutional investors actually buying Bitcoin. But the rest of the crypto market is essentially unregulated. And we've seen, especially in 2017, where you had the whole, instead of having these independent companies coming up, you had this crypto boom, and it was just mostly frauds. And most of them kind of knew that they were frauds. It's NFTs, and people are acting like all this stuff is so new. We saw all this stuff back during the Civil War when you had all these different currencies. I had David Gerard on, and he's like, the reason we have regulation is because we've done all this stuff before. This is right.
David's absolutely right. I mean, this isn't our first rodeo, for heaven's sakes. And you can see in the arc of American financial history, you can see a movement towards greater disclosure and, as I said, greater democratization. Creating markets where ordinary investors feel safe helped America produce the deepest, most liquid capital markets in the world after World War II. We were the envy of the world. And if you look at the financial histories of European countries, for example, and certainly in Asia, investing in the stock market was something only a tiny sliver of society would even dream of doing. I mean, in Europe, in Germany, stock market investors are the big banks. That's basically it. In France, the ordinary investors put their money in gold and they put it in a mattress. The idea of investing in the stock market would be unthinkable to them. So Roosevelt's reforms, as I show in the book, gave ordinary investors a sense that capitalism is for me too. It's not just for the big guys. Capitalism works for me too. The advent of well-regulated mutual funds was a revolution in American finance. It meant that you or I could have retirement funds that were diversified, liquid, priced daily, and managed by people who knew what they were doing. Never anything that an ordinary investor could have aspired to before Roosevelt and before the regulations of mutual funds that were enacted in 1940 is the last big capstone of his financial reforms. So the difference between a capitalism for everybody and a capitalism for the very few is the New Deal. I mean, that's what Roosevelt gave us, and it's sad for me to see it taken for granted to such a degree that we may well lose it.
Well, we're talking about FDR since your book, again, Taming the Street. You focus on FDR, the 1920s, the 1930s. You talk about the SEC, which, Securities Exchange Commission, probably actually, like most people, they don't even know about it. But of course, he had Social Security, which everyone today knows about. We have the FDIC, which I think, and I believe in your book, did you mention that FDIC originally started out at like $5,000 in terms of that insurance, and now I think we're at $250,000?
That's true. And, Roosevelt, you're right. I mean, if I were to enumerate the most important things that Roosevelt accomplished in his financial reforms, certainly the creation of the SEC and the full disclosure regime, all of the information that it made available would be a big, big, big thing. But the creation of the FDIC would be second on my list. It's hard for us to envision today, although I think things like the Silicon Valley Bank failure and Republic Bank and first that some of those recent bank failures was a reminder. But back in the 1920s, when banks failed, which they did on a daily basis, you lost your money. I mean, if you put together a nest egg and entrusted it to your local bank and the bank failed, your money was gone. In a few situations, if it was an urban bank with a good customer base, maybe some other bank would buy it, take it over, and you might get some of your money back in months, if then. So the belief, the ability to trust a bank with your savings is a gift from Roosevelt. I mean, before the FDIC, if a bank failed, the odds were you would lose your money. On the day it failed, you didn't know if you'd get any money back or not. In doing the research for this, it was so sad to see in local newspapers that some big bank would fail, and there would be inevitably these little reports of suicides from bank customers, customers who were in such despair because they lost everything in the bank failure. So that was a revolution to say that you can trust your banks again. And Roosevelt gave us that, and we still rely on it to this day. It's hard for folks to recall, but in my grandparents' time, they would no more put money in a bank than they would fly. The money went in a coffee tin at the top of the closet, because then you knew where it was. Then you knew it would be safe. So again, another gift from Roosevelt that helped democratize finance. Banks were no longer just for the big guys. Banks could serve ordinary savers. And then once you'd saved enough money, well, then you could safely invest it in the regulated stock market that Roosevelt created for us. Roosevelt also brought about the first significant effort to regulate business structure, business organization, with a law that addressed the pyramiding public utilities of the age. In the 1920s, public utilities, electric power companies and gas power companies, were the Silicon Valley of the economy. I mean, where you could get electricity, you could thrive. Where you couldn't get electricity, you were back in the 1800s. You were trapped in the 19th century. So these incredibly wealthy, incredibly powerful utility companies, they were writing their own regulations. They were picking their own regulators. They were among the most powerful corporations in the country. And Roosevelt said they're too powerful. They have too much control over our economy. They get to determine who wins and who loses, and no one should determine that except the people. And so he pushed through a regulatory bill called the Public Utility Holding Company Act, one of the most ambitious and arguably one of the most radical pieces of legislation of the New Deal, which basically said, you cannot pyramid one power company on top of another. You have to have some rational corporate structure that serves the public. And if you don't, we're going to require you to dismantle it. And several of these large utility holding companies, there were like 3 holding companies that controlled more than half of the electric market in the U.S. They were incredibly dominant. And Roosevelt said, we're not going to do that. You have to get scaled down to serve the area that you're serving. And it was very controversial. It was one of the hardest political fights Roosevelt faced. But it also had a remarkable and long-lasting effect on the U.S. economy. One of the studies I found in the course of doing my research showed that, contrasted with the European countries, the American economy through the 50s, 60s, and 70s was far less oligarchic than European and Asian countries. Look at Japan, look at Korea, look at France, Germany, England. You had a much larger percent of the economy controlled by fewer big corporations than in the United States. And the researchers trying to explain that anomaly looked back and, I mean, they're all operating in the same world economy, right? The one difference was that Holding Company Act, that in the 1930s and 40s, Roosevelt required these giant oligarchs in the making to dismantle themselves and get smaller. And the impact of that made our economy much more competitive, much less oligarchic, well into our lifetimes. So the impact of that was immense. It's not as well understood as some of Roosevelt's other contributions, but certainly was a long-term important contribution. He also beefed up bank regulation. I mean, he pushed through laws that gave the Federal Reserve more power and responsibility to be a bank regulator. He strengthened federal bank regulation. He had come of age as governor of New York State at a time when some big bank failures occurred on his watch and were extremely embarrassing to him. And he just had this visceral contempt for any banker that would betray the public's trust. And so he was determined to get stronger bank regulation. And one of those was, of course, the Glass-Steagall Act, which was adopted in the first 100 days of Roosevelt's term. And it basically told banks, you can sell securities to the public or you can take deposits from the public, but you cannot do both. It was an idea he borrowed from his own state banking regulator in New York State. And for many, many years, that kept Wall Street more diversified. It led to a less risk for public deposits. So, in banking regulation, in Wall Street regulation, and in the safety of banks, Roosevelt took substantial steps that made, as I said, made capitalism safer for ordinary people.
Right now, we're in 2024, going on to 2025, and your book, Taming the Street, really starts in the 1920s, so it's essentially 100 years later, and we often have these cycles. Right now, we're essentially in the quote-unquote robber baron age or the Gilded Age 2.0, right? So right. What are kind of the parallels between, say, 1920 America and kind of 2020 America?
Well, one of the big parallels is the hostility of the Supreme Court to business regulation. The Supreme Court that Roosevelt inherited when he took office in 1933 was so pro-business and so anti-regulation that like the first dozen New Deal laws were struck down as unconstitutional. So Roosevelt was attempting to enact laws under the constitutional power of regulating commerce. Interstate commerce is clearly subject to federal regulation in our Constitution. But the courts had so narrowly restricted what that could be, they had determined that no state or the federal government could enact a minimum wage law. Unconstitutional. It had deeply restricted the ability of the government, either state or local, to regulate agriculture. So Roosevelt faced a court that was determined to curtail the ability of government to regulate business. Ditto today. We've got a Supreme Court that in the past year has made a series of decisions that have dramatically hampered the ability of our regulatory agencies to effectively regulate business. Decisions affecting how the EPA works, decisions affecting how the Securities and Exchange Commission works, decisions outlawing administrative law judges as a remedy for enforcement, decisions overturning a long-standing doctrine that regulatory agencies' decisions should be deferred to by the courts because they were based on expertise. That went out the window this year, too. So there's the strongest and most frightening parallel, which is that we've got a court system now that seems determined to unravel, to dismantle the New Deal, stick by stick, timber by timber. So that obviously is a parallel. We also have nearly jazz age income inequality again in the country. Income inequality has been growing since 1980. The tax cuts and the attacks on organized labor that began with the Reagan administration have greatly exacerbated the gap between the richest and the rest of us. And so now we are at levels. I haven't seen the most recent numbers, but the ones I saw when I was working on Taming the Street are virtually back to 1929 levels with a gap. Now, why does that matter? Well, if too much of your money is going to too few people, consumer demand will inevitably suffer. Henry Ford was an absolute jerk, an anti-Semite, and many other things. But one thing he did see as a manufacturer was he had to pay his workers enough to afford to buy his cars. Because if the workers could not afford to buy cars, there was no market for his cars. And that insight is what the Gilded Age, the 1.0, lost sight of. And I'm afraid it's what we're losing sight of here, too. That if the great rank and file of American workers cannot afford to buy what America is making, then it's a depression waiting to happen. So I think that gap between rich and poor is another very strong parallel and a very worrisome one. We're not quite back to 1920s level dominance of government by business, but we're pretty darn close. We're going to see in the appointments that President-elect Trump makes how much influence he's going to hand over to plutocrats. The notion of the richest man in the world being part of a Washington government is a direct parallel. In the 1920s, the richest man in America was Andrew Mellon, and Andrew Mellon was Secretary of the Treasury under 3 presidents, and basically dominated financial policy and made sure that financial policy served the rich, served the interests of business. So I think another parallel we're seeing is the growing power of wealth, of corporate wealth in Washington. There was a sense when Roosevelt came in, and it's captured in the diaries and letters of the people who worked in government during that period of time, both those who hated Roosevelt and those who loved him, that the world had changed, that the axis of the center of gravity had moved from the banking towers of Wall Street down to Washington, and that Washington now was the most powerful factor in how the company was run. And that has slowly broken down, slowly at first and now quite rapidly in the past 12 years. And now we're seeing that once again, the most powerful forces in how Washington is run are the forces of business and finance. So that is another parallel that I think we're sort of living through again. The difference is, the big difference is that there's a better safety net for the average individual now. However, the new administration is coming in with a lot of people on board who are determined to dismantle a lot of that safety net. So if that happens, then we are right back in the 20s with, the rich getting richer and the rest of us getting by if we can.
We're recording this episode on Tuesday, November 12th, 2024, so a few days after we've had the full results of the election. And Donald J. Trump didn't just win the Electoral College, he also won the popular vote. So what does that say about the United States of America going into 2025? That not only did Trump win, but he also won the popular vote. And he's I believe George Bush Jr. won the popular vote, and it was the last, 2004, right? Yeah.
Yeah, you're right. It has been 20 years since a Republican president has won the popular vote. What does it say about America? I've read many of the thousands of articles that have come out in the past week trying to analyze how this happened, why this happened. no intelligent person could dismiss the influence of deeply ingrained misogyny and racism in the American culture. I mean, if you try to tell me that that wasn't a factor in this race, as it was in the last several races, I'll tell you, you're crazy. I grew up in Jim Crow South. I grew up in a part of the country where whites-only signs hung on water fountains and restrooms and department store dressing rooms. I remember what it was like when government was not on the side of tolerance and equality. So obviously that remains something that America wrestles with more or less successfully as time goes by. I grew up as well in an America where a woman like me couldn't get a credit card, couldn't open a brokerage account, couldn't get a loan, a car loan or a mortgage, couldn't start a business. I don't see us going back to that degree of restriction, but certainly, it's been an amazing change, but one that still is incomplete. I mean, you look at women are half the population. They're not half the CEOs. They're not half the judges. They're not half the faculties. They're not half the corporate boardrooms. So still a lot of misogyny. But I think one of the biggest factors, and this is what is so worrisome to me as a lifelong journalist, one of the biggest factors that seems to be emerging is misinformation. That the ill-informed voter went overwhelmingly to Trump. By ill-informed, I mean a voter, many of them have been interviewed, a voter who thought that foreign countries would pay the tariffs, not U.S. consumers. Voters who, when asked if they weren't worried about Trump being an autocrat, said, "What's an autocrat?" So the distortion of our communications ecosystem to produce a body of voters who thought that inflation was at all-time highs when in fact it was falling, who thought that unemployment was at all-time highs. Dear God, it was 25% during the Great Depression. It was 3.4% under Biden, but they thought unemployment all-time highs. Voters who thought that crime was at an all-time high when in fact it was falling rapidly. If you were wrong about that, those questions, you voted for Trump. So I don't know how we address the misogyny and the racism. It is a lifelong effort of mine and for this country to address those issues. Fortunately, I think there are enough women and people of color in positions of political power now that there will be pushback on that, and there will continue to be pushback. The misinformation, Jesse, I don't know what we do about it. I mean, your fabulous podcast is wonderful, but it's representative of a fragmented ecosystem where tiny little streams or even great big robust streams of information flow to select people. And if those streams are polluted with falsehoods, it produces an electorate that really does not know what's happening. Now, what's the prospect for this? As I said earlier, I think a lot of the policies that President-elect Trump has espoused and protests to this day he is going to enact are going to break through that bubble. They're going to break through that misinformation bubble. Anybody who thought that when he said he was going to deport 11 million people, he didn't mean their grandmother in Miami, is going to be mistaken. And they're going to discover that they are mistaken. Anybody who thought that electing Trump was going to bring their prices down, they are going to discover very soon that with the impact of tariffs and the impact of deportations on the labor forces for food and construction sites and all of those key sectors of the economy, they're going to find out very quickly that they were wrong, because reality is going to bite. Fox News can tell you all it wants to that everything is fine under Trump, but you're going to know, and the Trump voters are going to know. And I frankly think, depending on how rapidly the new administration moves on these key components, the deportation and the tariffs, you're going to see buyer's remorse setting in really, really fast. And you keep your eyes pinned on the 2026 midterms, because I think if Trump proceeds as some of his more extreme advisors are urging him to, you're going to see a lot of Trump voters saying, that isn't what I thought he was going to do. That isn't what I wanted. So we'll see. It obviously, as a woman who spent most of my life trying to expand the opportunities for my great nieces and the young women in my life that I love, it was hard to see so much support for an administration that quite openly, vocally, was hostile towards opportunities for women. But we're not going back. I mean, my sister's granddaughters are not going to be denied a credit card. They're not going to be denied a brokerage account. They can't push us all the way back to where we were when I was young. So I'm hopeful that things may have to get worse before they get better, Jesse, but I think they will get better.
My wife is college educated. She makes six figures. She's a first generation immigrant. She's brown. She's from the Philippines, and she voted for Trump. And when she hears that, he's misogynist and racist, I mean, there's a lot of people like her that voted for Trump because they're constantly told like, hey, like, you're stupid. And, like, she was kind of like talked down to by a lot of the Democrats, and she voted for Trump. So I feel like there's a lot of kind of disconnect between why Harris lost, and if people aren't, if the DNC can't actually recognize this, then they're going to lose the next election cycle. You have, Obama talking down to people saying that you should vote for Harris because she looks like you. Well, she might look like you, but she might not have the values that you have. Or
in all fairness, that is not what President Obama said. President Obama said you should vote for Harris because her policies will help you and his will hurt you. And there's no argument about that. I don't care whether you felt condescended to by Democrats or not. Democrats' policies would have helped you more than this administration's policies will. Now, at some point, things will get hard enough, as they did in 1932, for people to say, I've got to vote my own self-interest now. I can't vote my biases. I can't vote my prejudices. I can't vote my hurt feelings. I can't vote my pride. I've got to vote for what's going to help me. And the idea that deporting 11 million people from our workforce is going to help anybody is nuts. So I think I'm sympathetic to people who felt condescended to. My granddad was a coal miner. The first house I lived in didn't have indoor plumbing. I was able to get to college on a college scholarship. And I'm very grateful for the opportunity this country gave me to rise from very working class origins and really live the career of my dreams, working as a journalist at some of the best publications in the world. But I'm very much aware that we have an obligation to turn around and hold the door open for those behind us, not to pull the ladder up and say, okay, I got mine. You're on your own. So I'm sympathetic. Listen, as a woman in a profession dominated by men, I've been condescended to my entire life. I've been condescended to in my entire career. But making critical decisions about electing a president of the United States based on that perception of wounded pride isn't smart. You need to make decisions based on whose policies are going to serve you best. And certainly if we're talking about people of color, if we're talking about ordinary investors, if we're talking about immigrants trying to get a healthy start in the new country, democratic policies serve you far better. Democratic policies have expanded federal scholarships available for poor students. I'm really in favor of that. I'm a scholarship student myself. The opportunities to safely invest, to safely save, those are opportunities given to us by Democrats and threatened now by Republicans. So I'm not sure how you talk to someone who acted out of wounded pride as a voter. If you voted for Trump because you wanted lower taxes, and if you voted for Trump because you wanted less business regulation, I get that. The Democrats aren't going to give you that. And even if you voted for Trump because you think he will boost the white male patriarchy, and that's what you want, I get that too. Yeah, Democrats aren't going to give you that either. They're not going to, bless your white supremacy. They're not going to pat you on the head for wanting to keep women barefoot and pregnant in the kitchen. So there are some things that the Democrats just simply can't promise. Low taxes, no regulation, a white supremacist state. And if that's why you voted for Trump, then you voted for the guy that's willing to at least give lip service to those. You'll certainly get your tax cuts. You'll certainly get your lax regulation. Whether or not he can restore the male patriarchy remains to be seen. But if you voted for Trump because you thought the Democrats didn't respect you, or if you voted for Trump because you thought the Democrats were elitists and looked down their nose at you, that comes under the category of cutting off your nose to spite your face, because you have helped elect an administration that is, I think, going to do immense economic harm to many of the very people who voted for him.
So, Diana, we mentioned before that you're also the author of the book, The Wizard of Lies, which tells the story of Bernie Madoff, or Madoff, I guess I should say, right?
Yeah.
And I mean, did this happen? He basically fell in like 2008, right? This is right after kind of the crash. Right. What are the parallels between Bernie Madoff and crypto?
Well, that's a really good question, Jesse. I haven't thought of that. Let's think. Well, one big parallel is in the script that he told. I mean, every Ponzi schemer has a script. In essence, a Ponzi scheme is a theatrical production that only the Ponzi schemer knows is being held. You think it's real life, and he's actually just putting up a play. He's running a script here for you. And in Bernie's case, the script was very complex. He was using a split strike conversion strategy that allowed you to use options to protect you on the downside but cap your gains on the upside. Well, I mean, who can understand that? So the idea of using engineered complexity to conceal what you're doing, to make people's eyes glaze over and say, oh, whatever, you just do whatever you think is right. Mr. Madoff, meet crypto. I mean, because that's the same idea. This is so complicated. This is so complex. You don't really understand it, but look how much money you can make. Well, that's essentially the same Ponzi scheme argument. You don't need to understand it. Trust me, and you'll make a lot of money. Or trust me, in Bernie's case, and I'll keep you safe. I'll navigate you safely through this extremely complex, difficult to understand investment. So that's one big parallel, is the use of complexity to discourage scrutiny, to discourage skepticism, and to encourage blind trust. So that would be one of the parallels. Even the fluency that Madoff had with the regulatory world. He was the 3-time non-executive chairman of NASDAQ. He knew Wall Street regulations down to the ground. He knew everybody at the SEC, had been on multiple roundtables and in advisory capacities to them. That's what I see emerging now in crypto. There's some talk of perhaps a crypto executive being tapped by Trump to chair the SEC, to be the SEC chairman. I'm beginning to see the leading crypto figures, working with Congress to try to design the legislation that they could use. So I think another parallel is that fluency with the regulatory world and how to use it. I apologize for my puppy barking in the background there. I don't know if you're picking that up. But let me think of the other parallel, of course. The biggest problem that I have with the crypto space right now is that the resistance against regulation is incompatible with the invitation to retail investors. I mean, if you want to bring retail investors in, you need to be regulated. If you don't want retail investors, you want it just to keep it an institutional market, fine. I don't care if you're regulated or not. But you can't have it both ways. You can't say or you should not be able to have it both ways. That we're going to bring retail investors lacking in sophistication, totally dependent on what we tell them, utterly vulnerable to deceptive sales pitches. We're going to bring them in, but you can't regulate us. It's, I don't think, a sustainable long-term position. Bernie, too, exploited a gap in regulation. There was a gap at that time. They closed it after Madoff, but there was a gap in that time in the disclosure requirements required for hedge funds. And he exploited that to the max, while bringing in any number of small, ordinary investors, union pension funds, retired corrections workers, retired dental hygienists, were all pulled into Bernie's scam. So lots of retail interest in Bernie, while Bernie is navigating through this poorly regulated channel. See the same darn thing in crypto, pulling in retail investors and still trying to wheedle your way through to remain unregulated. Now, the smartest thing anybody can do is say, I'm not investing in an unregulated market, period. I don't care if it's an unregulated market in widgets. I'm not investing in an unregulated market because I'm not big enough to protect myself. I'm not powerful enough or rich enough or knowledgeable enough to protect myself in an unregulated market. And obviously, if a lot of people had said to Bernie Madoff, I don't understand what you're doing, and if I can't understand it, I'm not going to do it. And by the way, every regulated mutual fund requires a third party to hold the assets. You're supposedly holding the assets yourself. How do I even know they're there? I mean, if a mutual fund tells me I've got X amount in my portfolio, I know it's there because some third party, some bank, actually has the securities on its ledgers. You don't. So that exploiting that gap between regulation and retail, I think, is another parallel between those two worlds.
Right now I live in a college town, so I talk to a lot of late teenagers and then kind of like young professionals. And one of their big slurs that they will say to you is that you're a boomer, right? And even like myself. I mean, I'm 42. Like I'm not a boomer.
I'm a boomer,
right? But it's a slur that they use, and boomer for them doesn't mean that you're an actual boomer. It just means that you're older. But I lived in Puerto Rico for years. I've been around a lot of these crypto founders, and people will tell me I'm just too stupid to understand crypto. It's like, oh, if you don't like crypto, you're stupid. And it's just like, okay, we already done this experiment during the Civil War and after. We already know what happened. There's a reason we have regulation. And most of the cryptos are like meme coins anyways. What value is this cryptocurrency creating anyways? Like, it's not creating any value.
That's true. I mean, one of the interesting things about the crypto crash a few years ago was how little real economic damage it did. I mean, if crypto were a meaningful part of our financial system, and it went through the convulsions that market went through in 2017, 18, and 19, we'd have been in a depression. But in fact, the people who got hurt were the people who were speculating in crypto. The rest of us, I mean, I didn't suffer at all from the collapse of crypto. I don't own any. None of my investments own any. None of my banks own any. None of my family own any. It was a non-event for me. And so that idea of it being so central and so important, it troubles me though, Jesse, that the idea of that you're speculating in an unregulated market isn't perceived by these. Yeah, I may be a boomer, but I know the difference between investing and speculating. I'm old enough to remember when people made money trading pet rocks. I remember when trading Pokemon cards was a route to wealth. I mean,
the Beanie Babies.
Beanie Babies, yeah. Absolutely. So there's any number of crazy fads that hit the financial markets over and over again. This is one. Now, to my chagrin, crypto has been able to hijack a lot of the vocabulary we got from Roosevelt. I mean, Roosevelt gave us the vocabulary of regulation under U.S. law enacted by Roosevelt, the 1934 Act. An exchange is a regulated trading environment, a regulated trading forum, regulated. And yet you had companies all across the crypto space saying, I'm the Diana Henriques exchange for crypto. I'm the Jesse and Diana exchange for crypto. No, you're not. You're not an exchange under law in the U.S. if you're not regulated. You're a trading platform. If I'd been a regulator in the U.S., the first scrap of sales literature that went out calling a crypto trading platform an exchange, I'd have been on them like a goose on a June bug. I would have cracked down on that use of regulatory language right away. I've heard young crypto investors say, "Oh, well, my deposits now total thus and such." A deposit is something put into a regulated bank. It is not however much money you have loaned to a crypto trading platform. So this, call me a boomer if you will. I know the vocabulary. And if someone is investing in crypto and thinks that they're making deposits into an account on an exchange, then that's just ignorance. That is just flat out ignorance. Just because something is new doesn't mean it's brilliant, and just because something is new doesn't mean that anyone who's a boomer doesn't understand it. I don't know where this crypto regulatory fight is going to end up. Obviously, it's front and center right now as the new administration moves in. But wherever it winds up, I think it's still going to be a place where the average investor needs to be exceedingly cautious about investing there. I don't think it's ever going to reach the level of regulation that mutual funds have, that banks have. And if you don't have enough wealth to burn, then entrusting what wealth you have to an unregulated bazaar, an unregulated flea market, I think is nuts. I think it's a good way to wind up poor. We've got good, safe, regulated investments for people who are trying to get a leg up in the economy. And a smart person will use those instead of trying to make a overnight killing in some intangible, imaginary asset class.
Wasn't it like Samuel L. Clemens, aka Mark Twain, who said that history doesn't repeat, but it rhymes? Wasn't it during the 1930s that something like 4,000 or 5,000 banks a year were basically going under?
Yes.
Before we had all this regulation and we had the FDIC, and now it's like instead of it's being banks going under, it's cryptocurrencies going under, right? Isn't it just kind of this, right?
It's very much the same thing. It's
right?
Very much the same thing. We'll be curious to see what drove the banks at the last stages of their collapse. And your listeners might not know, but on the day that Franklin Roosevelt took the oath of office, March 4th, 1933, America did not have a functioning banking system. Every state in the Union had either shut their banks down or sharply restricted withdrawals from the banks to prevent a massive run on the entire banking system. So there was not an open major bank in the United States. They all had closed their doors. And because they had closed their doors, there wasn't a functioning stock exchange or commodity exchange, because you can't trade stocks and commodities if you can't pay for them, and you can't pay for them if there are no banks. So basically, our financial economy had come to a halt on the day before Roosevelt was sworn in. We had no functioning banking system. He rebuilt it in 2 weeks by instilling confidence in it again. But up until that time, and one of the things that drove him to reform banks was the realization that one of the great tragedies of the Great Depression was the hardworking, working class, middle class citizen who had saved for a rainy day, who had put money aside in case they hit hard times, and then watched that rainy day cushion disappear in a bank failure. Billions of dollars of savings were wiped out in the bank failures of the 1920s, and especially of the Depression. They're varying counts, but you're absolutely right. 3,000 banks roughly had failed. A third of America's banks had failed before they all shut down on the eve of Roosevelt's swearing in. So the idea that it can't get that bad, it did get that bad. And that's why the bank regulations we have today were put in place. Now, if crypto firms are failing because of mismanagement, as banks did, if they're failing because of bad investments, which banks did as well, that's one thing. If crypto is failing because people suddenly lose confidence in that company, in that asset, it's exactly what happened to the banks before regulation. So, I often say to audiences when I'm talking to book groups about Taming the Street, so, if you want to know what the 1920s were like for average investors, look at the crypto market today. That's what it was like. Firms failing left and right, wiping out your assets when they did fail, no truth in disclosure, no common terms, no standardization of requirements, no rules, no regulations. They had nowhere to turn if you get ripped off. That's what the world was like in the 1920s, and why we would want to go back to that in any asset class, especially one as complicated as crypto. I have no idea.
You worked at the New York Times as a financial writer for almost 3 decades, in the 1980s to, was it like the early did you retire in 2012? Was that right? Yeah. So, I mean, what's changed? Like, what have been the biggest changes in the financial market? So you were pre-internet, right? We had the internet, we had high frequency trading. So there's so many different things. You had the dot-com bubble, you had the crash in 1987. So you had 2 housing crashes in your
the savings and loan crisis,
right? Yeah, which predated the. So I mean, you've dealt with a lot of stuff, but it's kind of a loaded question.
Oh, that's a wonderful question. I think the biggest change was the movement of finance from of finance now, not business. And let's distinguish between those two, because businesses make things. They make and sell things and move things and build things. There's a real world component to business, but finance had always been sort of like the jockey on the back of this big, beautiful stallion of business. And over the years that I was in the business of covering that, finance got bigger and bigger and bigger and bigger. And so now it's almost to the point where it's the stallion and business is riding it, trying to steer it in healthy directions. So I think that movement of finance from a more secondary role in the greater world of business into a more central, dominating, powerful role in the world of business has been the single biggest change. And the effect of that is something that we all feel. And when I first started working as a journalist, most American workers who had a pension had what we called a gold watch pension. They had a pension that was going to pay them a certain amount when they retired, and that was professionally managed by some pension fund manager. Today, we're our own pension fund managers. We're all running our own 401ks and our IRAs and trying to make good decisions about them. That's what I mean. Something that had been, an elite component of my world. Somewhere out there, I had a pension fund manager who was managing my pension, and someday I would collect it. Now it is an everyday requirement for me to pay attention to what I'm doing with my money because it's my retirement security. So finance has really just pushed its way into the center of the party. It's shoved everything else aside, and it is now dominating how we think about the world of business. So that change happened slowly and then rapidly. I mean, it began obviously with the rise of the great stock market boom in 1982. Which pulled, it was driven a large degree by a lot of institutional investors, pension funds, endowments, and foundations who had been burned in the bond market of the 1970s and needed to recover some growth, which they did by entering the stock market. But that boom in the stock market, accelerating over time, produced an enormous number of changes. The rise of mutual funds, the development of ETFs, online banking, online lending, all of those have made finance part of our daily life as citizens. And it never was that until these recent years when I was first starting out. You'd look at the business sections of American newspapers, and they'd be corporate profiles, and they'd be discussions of new products and innovations and inventions, patents that had been put through, or real estate development, one of the oldest hale and hearty topics of business coverage. What's happening in the real world out there, building shopping malls and building housing developments. You look at a business section today, if you can find one in an American newspaper, and you'll see finance touching virtually every story there. Look at the political headlines, and you'll see finance touching many of those as well. So I think that's the biggest change. And what troubles me about it is finance is what Americans least want to learn about. We can't ignore it, and yet we won't learn it. And I think that's just a recipe for ruin, frankly. I think it's essential that America do a better job in financial literacy, that they do a better job in financial education, because I've seen finance just shove its way to the head of the table, and it's intent on staying there. So the rest of us really need to pull up our socks and learn what's going on. But that's the biggest change. You're right, of course, that the digital revolution was an amazing change for reporters. I mean, for the world of journalism, the digital revolution was a shock. It's one of the most convulsive things I've ever lived through as a worker. Though the way it completely changed newsrooms and newsroom cultures and delivering the news gave us many new tools, wonderful tools. The very disclosure documents you were talking about. When I was a young reporter, I discovered very early the charms of a 10K and a prospectus. I mean, the first market I covered was the municipal bond market, and the first time I saw an offering statement for a municipal bond issue, I thought I died and gone to heaven. My God, all this information right here in this little onion skin booklet. But back then, I was working as a reporter at Barron's, and if I wanted to do a profile of a company, I had to call a private company, Mead Data, on the phone and tell them I wanted the most recent 10K, the subsequent 10Qs, the prospectus, and the original registration statement for company XYZ. A cardboard box would arrive on my desk the next day, if I was lucky, a day or so later, if not, and it would cost thousands of dollars. So using the information that Roosevelt made available to us was the work of wealthy journalism organizations. You had to be able to afford to dig into those prospectuses, to buy those 10Ks that you were talking about. You bought them. Today, you can get them on your phone for free. So, that has radically changed, leveled the playing field in terms of doing business reporting, investigative reporting, and business reporting. But it also has, obviously totally upended the business model of American newspapers and American news organizations. And we're still coping with the fallout of that, with this rise in misinformation. So it would be hard to pick the single one thing that was the most important change in that career. But certainly those would be two, the centrality of finance today compared to when I started out. And I've just completed, I got my first job this month, 55 years ago. So more than half a century of changes in the American business scene. And those two, the centrality of finance and the impact of the digital revolution have been without a doubt the biggest, have had the biggest impact on those years.
I was personal training in Denver, but I had this client that worked for the Denver Post. And this would have been like, was it 2008, I guess, right, when Obama was running. And he said the biggest mistake that the newspapers made was that they gave away everything for free. And then he said they put it online. They really didn't think anyone would read it. And then all of a sudden, everyone expected everything to be free. And he said that was the biggest mistake, is that we basically gave it away free thinking no one would read it anyways. And then everyone expected that. And the whole business model kind of shifted. And I don't think anyone anticipated that. But what's kind of the parallel to that in 2025? Right now, we're seeing the podcast. I mean, the podcasts are destroying mainstream media. I think was obvious. Some people are calling this election the podcast election. People call the 2016 election kind of the social media election. Yeah. Let's extrapolate this out. What's kind of the future?
We were all worried that this was actually going to be the artificial intelligence election. The next one may be. All of this kind of falls under the misinformation title. I'm hopeful that, as with the digital revolution giving us both problems and solutions, that will work in this vein as well. That somehow the technology is going to enable us to address this fire hose of misinformation that's so distorting voters' choices and policymakers and how people even think about their own world and their own experience. But I'm deeply concerned about artificial information. I think it's something that there's been some desultory talk about regulation, some desultory talk about we need to do more, we need to understand it. I think the horse is pretty close to having left the barn. It's hovering around the doorway right now, and I think we need to get a bridle on it now or forever chase after it. So I think that's something that's going to have a huge impact in every world, certainly in my world, in the world of journalism, writing, that is already being felt, but certainly, but in every other field as well. So I think that's a critical concern. I also think, well, I hope I'm wrong about this, but it's possible that the next election will be the AI election, but it's also possible it will be the autocrat election. I'm seeing on a global scale an impatience with the hard work of democracy. Governing yourself is hard. It requires you to pay attention. It requires you to educate yourself and to vote. And this most recent election suggested an awful lot of people just don't want to or are not willing to or can't make the investment in information gathering that's necessary for self-governance. So I'm a little worried that this, what we see as a global shift towards more autocratic and less democratic government is going to persist. And now an autocratic election may be an oxymoron. It may be a contradiction in terms, but I don't think we can rule that out as a possible.
When you start talking about people want results faster, is that we look at, they always say, people's attention spans have decreased, especially with social media, where it's like, you watch some 20-second clip, you can't even watch a full movie or a full TV show, let alone read a book. And so, the wheels of government turn slowly. Right? Like, you got multiple branches of government, you got multiple checks, and maybe for people that might be, it's pretty slow, but that's the reason why you have democracy, right?
Yeah. And to be fair, climate change is going to present societies with crises that have to be coped with rapidly. And there's two ways to do that. If you're going to be facing massive wildfires, air pollution problems, flooding, population migrations away from troubled areas, massive rebuilding projects. If you're going to be facing that, there's two ways you can go. You can say democracy is too slow and inefficient, can't do it. We need a strong man. We need someone making individual decisions, telling us all what to do. Or you can say we need to make democracy more efficient. We need to elect people who know how to make government work and put them in charge. That's harder than, just let Trump do it. But ultimately, obviously, as you said, Jesse, that's the route of democracy. That's the way we retain the right to govern ourselves. But, here's what you know about human beings. We're going to be governed. Human societies do not operate as atomistic, ungovernable chaos. We are a social species. We form in groups. Those groups will be governed. The great American experiment was, hey, let's govern ourselves. But that was a fairly new arrival on the historic scene. For the vast stretches of human history, somebody else governed us. Some king, some pope, some tribal lord ruled us. And there's nothing to say that we won't go back to that. I think it would be devastating loss, but there's nothing to prevent it from happening. We've spent most of our human history living that way. So I hope that what people will decide to do is the hard work of self-government. But one way or another, we're going to be governed. Either we do it or someone else will do it.
We talked about crypto, and then you're talking about this AI. And one of the fears that I have is that we're going to be governed by a DAO, or a decentralized autonomous organization, where, it's people think like, oh, it's hooked up to the blockchain. AI is making these decisions. Like, humans are fallible. Humans make bad decisions. Like, let's just let a DAO do it. Put it on the blockchain and we're going to see it. And I think that's kind of the fear, because a lot of these young people, they really believe in DAOs. They believe in cryptos. They think it's like this whole new thing. And that's kind of the fear to me, is that, like, let's let a DAO do it. Right. And I had Jeff White on, who wrote a book called Rinse, talking about money laundering. But if you remember that, basically, like, I think it was like North Korea has hacked something like $2 billion, and they were running things through Tumblr. But the Tumblr, was it Tornado? Yeah, Tornado Cash. Tornado Cash, the actual people that created Tornado Cash burned their keys. And so you had this autonomous Tumblr just like spinning the crypto, so no one could decide where the crypto came from, but yet no one could shut it down because it's autonomous, and the only people that had access to it, and the creators burn their access to it. Like, I mean, this is like a world, like, if you're talking about AI, like, I think like it could get crazy. And like, and like when, and like, to me, like, it's like the term boomer, when I mentioned how a lot of young people use that term as a kind of as a pejorative. It's like, to me, I mean, the vast majority of my guests are boomers. I think that they've experienced life. You don't have to agree with everything that they say, but they've lived life and they have a lot of experience, which is why most of my guests are that. And we learn a lot on this program. And like, sometimes when you're 20, you're just, what's the whole expression? You're full of piss and vinegar, but you don't know what you don't know. And
that's great. It brings me right back to Taming the Street. One of the neat things about the New Deal was it was young people. Young people built the New Deal. Roosevelt was himself approaching 50, but the people he brought to Washington and put in power were younger than anybody could ever imagine. They call them the young hot dogs. These brilliant young men who went to Washington with the New Deal. It was a time when youth really, really mattered. And so I think that the experiences that we have are going to be helpful in guiding where we go, but it's going to be your generation that's going to have to make those decisions. So, happy to be of advice and counsel, but it's you guys who are going to have to figure out how it works. I hope that maybe everyone who hears this will take a moment and find somewhere online to stream the little Disney snippet called The Sorcerer's Apprentice, Fantasia. This is The Sorcerer's Apprentice. It's an old tale of a sorcerer who goes off to town and leaves his young apprentice in charge. And the apprentice doesn't know a lot, but he knows how to do a few things. And he's supposed to wash out the sorcerer's lab while the sorcerer is gone. So he figures out how to do a spell that will make the bucket fill itself at the well and the mop do the mopping for him. But he never learns how to stop them. So the bucket keeps filling up the lab with water, and the mop keeps swashing the water around. And by the time the sorcerer returns, of course, it's a disaster. They knew how to. The apprentice knew how to start the magic, but he didn't know how to control the magic. And I'm afraid that might be where we are now. We need to learn how to control it. You can't just turn the machine on and then try to figure out how to stop it or how to steer it. You need to figure that out first.
Today's guest has been Diana B. Henriques. She's known for numerous books. She's also a distinguished journalist and best-selling author who wrote the book about Bernie Madoff, which was adapted into an HBO movie called The Wizard of Lies. And we discussed her newest book today, which is called Taming the Street, The Old Guard, The New Deal, and FDR's Fight to Regulate American Capitalism. So, Diana, thank you so much for joining us. Just two final questions. Where can people find you, get a hold of both your books, Taming the Street, The Wizard of Lies, and, of course, some of your other ones? I think one was called, was it like the White Shark of Wall Street? I think it was.
That was on the post-war corporate raiders and a first-class catastrophe, which was the history of the 1987 crash, almost the only history of the 1987 crash. My website is dianabhenriques.com. Folks can read the first chapter of Taming the Street for free there on the website, see if it appeals to them. And there's information both about my other books and about the HBO adaptation of the Bernie Madoff book. So dianabhenriques.com.
The final question I always ask is just leave us with a final thought related to any of the books we discussed today, or just about whatever's on your mind.
Well, I'm still, of course, absorbing where my country is and where life is steering us. But I think we all need kind of a mental health plan for the years to come. I think we're going to need to figure out ways to stay strong and engaged and compassionate in the days to come, and that's what I'm spending a lot of time working on. A lot of that means engaging with other people, which is why I'm so grateful to you for inviting me, Jesse. I always enjoy our podcast communications because I feel like the folks who listen to you are people I really am grateful to be able to reach. So thank you for including me. And I hope we'll check in later and see how it's all turning out.
My dear friends, that is it for this episode of El Podcast. Once again, if you're not yet subscribed, please subscribe on YouTube as well as Rumble. You can also find us on Spotify and Apple Podcasts or wherever you get your podcasts from. We thank you all from the bottom of our hearts for watching and listening, and we will see you on the next episode.